Hey everyone, Addy here. So last few weeks, maybe a month or two has gone by and I haven't made a video. And I am making one today because I made a trade yesterday. This is my only futures options trade in my account right now. And the trade has gone bad. So I thought maybe, I don't need to really talk about good things all the time, good trades and profitable trades. I also want to show you when things go bad, how do we actually adjust and how do we stay patient with the market and what do we actually do. So here was the rationale. I did not really wanted to take this trade yesterday, but I saw that the market was on its butt yesterday. This is the 30-year bond market, and I took a trade in there. The rest of my portfolio has been really positive this year. Even this ticker has been positive, but this trade has gone bad. So I just want to talk about this trade right now, which I took yesterday. Anyway, the market was down. The way my chart is set up, it was showing me that it will keep falling. Fine, I'm a contrarian trader, so I need to take the opposite side of that because that's where the premiums are. If the market is falling, we sell put spreads. That's how we trade, and that's how I've traded this year profitably. So the market was down. I think it was trading around 118 yesterday when I took the trade. But this is what I did. So I went in with a short put spread. Like I said, I will go in as a contrarian trader on the short put spread side. I actually want to show you my positions first. So on the trade tab, if you select /ZB, it will bring you up to this screen, which has all the option chains in there. I selected 42-day cycle. Again, our go-to strategy is 45 to 50 days, sometimes 55 days, but 60 is a little bit too much of a stretch for me. But anywhere between 40 to 45 is optimal. Anyway, so I took a trade here at short 115, long 114 strike in the 30-year bond market. Now, the direction was down, right? So I took a long side of it and I collected 30 ticks. So each tick is 156. Okay, so I did collect 10 ticks. You can see that from here. Let me circle that for you. So here's the price I paid. I collected for this trade. Anyway, well, the way we can look at it is my max profit on this put spread was 156, right? So if I bring in each tick is 15.625, so 156.25 divided by, I sold it for 10. Okay, so I sold it for 10 ticks. I collected $156, right? Paid $7.75 commissions each way. Well, only one way so far, but yeah, I paid $7.75 commission. So my net potential profit is 156.25. It's 148.5. Now, what happened then? I sold it when it was trading here around 118, and then the market kept falling on me. So it is now trading at 116. The markets are closed right now, but it's currently trading at 116 and 9 ticks, right? 116.09. It's a really weird way they price these products, especially the interest rate market, meaning the 30 years, the notes, the 5 years, and all that. I will explain that later, but this is how it is. Each tick is $15.625. You just need to remember that. And I think these are the sold prices. These are the prices I traded in this column here. Okay, so then what did I do? The market was falling and I was down about 60% on this trade. So I was down about 5 ticks or something, 5 or 6 ticks, right? So then what did I do? Like I teach in my course, I sold the call side and converted this into an iron condor. Now, when I sold the call side, I collected the difference between this 37 and 25, which is 12. So I collected 12 ticks, another 12 ticks, right? So my total collection now is 187.5 on the call side and 156.25 on the put side. Now my total max profit should be 343. Is that what it shows here? Let's see. So if I hover over it, yes. If you look at the bottom left part here, look at the T number. If I hover anywhere over here in my max profit line, 343.24, meaning, yes, I have collected 12 ticks on the call side so far, and then 10 ticks on the put side. Now, I've also paid some commissions on the call side. So $7.75 on the put side, $7.75 on the call side. So I've so far paid $15.50. And my max collection has been $343. So my max potential profit now is $327. Now, the trade is sitting here. It is on the short side right now. I have got some short delta. So I have some long delta because now the market is falling on me. I'm going to sit here. It went past my threshold of 60 to, I don't normally adjust until my trade is about 100% in negative. Meaning if I sell it for 10 ticks, the trade has to be negative for another, you know, 100% before I make an adjustment. But here I saw the move down. It was quite, you know, quite drastic yesterday and this morning. So I sold the call side just to protect myself a little bit. Now that the market has fallen so much that I was also tempted to sell another put spread. Again, like a contrarian trader, I'm going to keep selling into the strength of the market. So the strength of the market is on the downside. So this morning I sold another put spread, and this thing is doing okay so far. I think this hasn't moved much. I sold it for 11 ticks. So I sold it for 34, bought it for 23. That's 11 ticks. If I hover over here, yeah, look, the max profit in this on this corner here. Keep an eye on here. Team number is 171.28. So if you do 1565 times 11, that's the number. So that's the number I sold. This is how much I've collected. Again, I paid 775. My max profit potential is 164 in this trade now on the put side. Now, what will happen? What happens if this thing goes wrong too? Again, I will do the same thing. I have 42 days left in this trade. Well, 41 now. I'm going to adjust it by putting this into an iron condor and then protecting myself on the call side. When it goes past 15 to 20 days and I still haven't made any profit, I will look to move the spread out into the next cycle. Now, one more adjustment that I will look at is if it keeps falling and then my short delta on the call side is now around 9 or 8 or 10, I'm gonna move the call side down further, right? And then I collect more premium in this cycle if I have enough days. When I say enough days, meaning how many days? If the days to expiration is over 30 days. So in the next 12 days, if the market keeps falling, I'm going to move the call spread down further until I have 15 to 20 days left. And that's when I will think about moving the spread all the way out into the next cycle. Now, the next cycle right now is sitting at 76 days or something, 70 days. So I don't want to be there. 70 days is not very liquid for me. If you look at the open interest and volume column, it is quite liquid. But again, it's too much of a time for me to put into this trade because then it affects the overall ROI of the position. I want to stay in the current cycle until I have no other option. I've exhausted all my right now, nothing to worry about. Again, this is how we trade. Sometimes it works, sometimes it doesn't work. We know how to fix it when it doesn't work. And that's exactly what I've done here. Sold a short put spread, converted this into an iron condor, and then I had to sell another short put spread because the market was down so much. Again, why am I taking an additional risk? How much capital have I put towards these trades? $320 to start the initial trade on the short put side. Nothing, no margin to sell the short call side because it's considered as a one trade and they don't charge you any more margin. For this extra short put spread, I have paid another $200 down. So for a full $500 or $550, maybe $600, my max potential profit here is $340. Sorry, $515 now. And I will look to collect at least 200 out of this. 200, 250, depending on where the market goes. But now I will manage these trades individually. So for example, I will manage the short put spread individually, the new one that I've put on today. And then I will manage the iron condor separately that is continuing, that has continued from yesterday. So this is how we trade. I just want to do a quick recap of a trade that's gone bad for me. I'm not going to take a loss here because we are very confident in how to manage these trades. I know the market, even if it goes max loss, first of all, we will not go to max loss, right? I mean, we will not let it go max because we know how to adjust. So then when we know how to adjust, then, we will keep following the market. We will keep following because now the trade has gone down a little bit. And it wasn't really at the point where I normally make an adjustment, but the drop was really quick, really big. So I did make an adjustment. Anyway, just letting you guys know. If you want to know more about how we trade, I'm doing an upcoming event where I'm talking about all these strategies and how we trade and how we adjust and everything. Check it out on my profile. There is a link somewhere. In the meantime, hit me up if you have any comments. Thank you very much for watching. Bye bye.